Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock. We're going to be talking about why SoFi stock is somewhat of a disaster right now. However, we're also going to talk about, despite it falling over 50% since its highs and the beginning of the year, if SoFi stock is really a good buying opportunity, or if analysts and YouTubers are just pumping the stock for absolutely no reason. We're also going to discuss whether or not SoFi stock is done yet, which could mean either is it done falling yet, or is it not done yet because it has a future growth potential. So we're going to be doing some technical analysis on the stock as well to determine what the stock price and the stock charts are telling us as investors. We're also going to be going over some of their financial data and their projections, as well as some of their fintech competition, and why some analysts and reporters say to stay far away from SoFi Technologies, while other reporters actually think that there is going to be a resurgence in SoFi stock relatively soon due to all the positive news and buzz surrounding SoFi Technologies right now, despite its recent dramatic decline. So this is going to be a news update video with the most updated price targets and projections for SoFi Technologies. Remember to watch this video all the way to the end, smash that like button right now for more SoFi Technologies news updates, subscribe if you are new, comment down below your thoughts about SoFi Technologies, and without further ado, let's jump right into today's stories. So recently, if you've looked at the market, everyone is bleeding pretty hard right now from various investments, especially if you decided to invest into growth stocks, particularly fintech growth stocks such as SoFi Technologies. If you didn't know, SoFi Technologies is a financial technology company, also known as a fintech company, that has an all-in-one inclusive digital app that offers anything someone would need in terms of financial services and or financial products. Currently, the SOFI stock price has been dropping extremely aggressively as of late, along with the overall market. Currently, the stock trades for around $6.30, which is what the current stock price is as of right now. However, overall, 13 industry analysts are still relatively bullish on the company, giving this company a fantastic buy rating and a stock price target that goes as high as $22 per share. So are these analysts just completely wrong, or is SoFi getting the short end of the stick due to the market sell-off? Well, let's discuss this right now. Normally, in the last leg of a market sell-off, especially when we look at growth stocks, we see multiple former bulls or people who are very positive about this particular stock end up throwing in the towel and selling their high conviction plays, which would include SoFi Technologies. To me, if you do not have high convictions into a company that you're willing to hold the company even if it drops down to $1, then you probably shouldn't be investing into the company because that capital could have been used elsewhere. Also, if you need that money, you probably shouldn't invest. You're only supposed to invest capital that you don't need or that you're setting aside for potential future stock price appreciation. And despite the recent stock action of the current stock price falling, which we will talk about later in this video when we do our technical analysis, the internal metrics of the company continuously improve quarter over quarter and year over year. So clearly the company is improving based off of their financial metrics, which we will also go over in this video, which I hope will encourage and invigorate SoFi stock investors that in the long term, this is a good company. It is consistently improving, and it's only because of the current negative market environment paired with SoFi's short interest that has caused the stock price to fall. Also, this is somewhat good news because the more the stock price falls, the cheaper and less expensive the stock price gets compared to its overall financials. So although there definitely are larger risks by investing into aggressive growth stocks such as SoFi Technologies, we need to base this company off of its fundamentals and financials, not its stock price, because eventually, if the company is a good company that is constantly improving, its stock price will change directions and catch back up to where the company is actually performing at. But clearly we are seeing that the stock price is most certainly disconnected from the fundamentals and financials of this particular company. SoFi Technologies is a leader in the fintech space, and this is a rapidly growing space, and I've been bullish on SoFi Technologies ever since it dropped below $8 per share, because I think it was an absolute steal at $8, and I still think it's a steal right now. However, with that being said, don't be dumb and overexpose yourself to a single company. Nibble at the company, average down your average cost, but don't go all in on a single company. That is terrible risk management that I would never support. Your portfolio should be filled with plenty of blue chip stocks, ETFs, and other high conviction plays regarding single aggressive growth stocks, so you can be well diversified, which lowers your risk of losing money. And although the recent news and guidance surrounding SoFi Technologies has led led to a large sell-off, as you can see on screen here, for the SoFi stock price, the future growth of this company is completely intact. The stock is clearly stuck in a downward channel and trajectory right now, but we could definitely see a reversal of this, especially if the stock price breaks above $7.40, which would be exactly what it would take for the stock price to break out, which could happen if we get fantastic news or if they have a fantastic approaching catalyst coming up. But this makes us speculate where the bottom of this stock market sell-off is. Where is the bottom going to be for the SoFi stock price? Well, later in the video, we're going to talk about what we need to look for to determine when SoFi Technologies is actually going to start their uptrend. So right now, you just need to know that they are stuck in a negative downward trajectory, and unless they break above $7.40, the stock price is most likely going to continue to fall. So does this mean that the stock is going to be useless for your portfolio in the meantime? Absolutely not. This is still a very strong fundamental company that we need to keep our eyes on. And the reason why the stock price is continuously dropping mainly is because investors got scared of their guidance cut, particularly for their revenues and their earnings, because the student loan moratorium was extended, which means that SoFi has been cut off for a time from this revenue source, which has hurt them, and it has made investors extremely scared about investing into this stock. The student loan moratorium and the student loan payment freeze has been going on for around 2 years. However, despite this, if we use data to actually back our investment decisions, which is what I think all of us should be doing, SoFi Technologies has absolutely flourished internally if we use the company's own metrics during these 2 years. So this student loan moratorium has definitely hurt SoFi Technologies, but by no means has it stopped the growth of this fantastic company. It is still growing at a very impressive rate. Management expects that there will be another student loan moratorium extension that will make up the year of 2022 being another full year of the student loan moratorium being completely intact, and they've already given us guidance for this particular happening. Management now sees, like we've talked about in past videos, that they're going to bring in revenue for the first quarter of around $280 million and adjusted EBITDA of around $0 to $5 million for the first quarter, and they also have updated their full year 2022 guidance. On a recent 8-K forum, we see the CEO of SoFi Technologies make this statement that I hope will actually give investors back some of their confidence that has been stolen from them, but not really stolen from them. They've just given away their confidence in this fantastic company. And the quote reads, and I quote, "SoFi remains incredibly well positioned to drive continued strong growth in revenue, members, and products, along with continued and improving profitability, despite the fact that our student loan refinancing business has operated at less than 50% of pre-COVID levels for the last 2 years. Full stop. That is absolutely fantastic news. Even despite their student loan refinancing business being cut in half, they are still radically improving profitability and overall revenues on top of growing their overall products and members. The quote goes on to say, "Even with the assumption of no end to the moratorium in 2022, our new full year 2022 financial guidance represents approximately 45% year-over-year adjusted net revenue growth to $1.47 billion, a tripling of adjusted EBITDA to $100 million, and a doubling of margins." Now, does that sound like bad news to you? A 45% CAGR for their revenues, a 3x increase in their adjusted EBITDA, and a doubling of their overall margins. Again, despite the student loan moratorium, this is fantastic news. But yet, he goes on to say, "SoFi has done an outstanding job achieving record financial results, member and product growth, and consistent profitability. Despite the negative impact of the extended student loan payment moratorium, we will work diligently to continue that trend in 2022, end quote. So overall, I really don't understand why people are freaking out. They're still growing at a fantastic clip in literally all of their important financial metrics, which we will talk about. Yet, despite this, we see the SoFi stock price experiencing very high, much higher than normal short interest of around 20%, which means two things. One, one, the stock price is artificially being held low due to the amount of short interest and people selling the stock for absolutely no real reason, especially if you are a long-term investor. The second reason, any positive news or a good catalyst could cause the stock price to experience a short squeeze, which is basically when a stock has high short interest, buyers will flood back into the stocks, the shorts have to cover their short position, and if everything works together, this could cause a short squeeze, causing the SOFI stock price to actually explode. So with that being said, any big catalyst or positive news could trigger a rally, which is probably why so many people are talking about SoFi Technologies right now, even though I've been reporting on this stock for almost a year. Now, with that being said, if that does not happen, the short interest will literally beat this stock down lower and lower. But as each day SoFi becomes less expensive, the better buying opportunity it becomes. While SoFi may be slightly expensive compared to legacy banks, SoFi Technologies is not a legacy bank. They are a rapidly innovating and growing fintech company, which means their current market capitalization and current stock price is extremely reasonable, especially if you want to hold this company over the long term. And that is going to conclude our part one of this two-part video. Because I've had so much news and so many questions I wanted to answer, I ended up splitting this video into two parts. So remember to go and smash that like button right now, subscribe if you're new, go check out the second part to this video, and with that being said, I'll see you over on the next video.